I don't know if they'd be considered black swans because pretty much the whole market is watching them, but that's what we'll call them because they could have significant impacts on cattle futures prices in a very short amount of time. Good afternoon, everybody, and welcome to the CommStock channel. I'm Zach Hooker. Today we're going to be talking about the state of the cattle market, a little bit of market action this week, and then what we're watching as we head into the fall. Cattle futures have been lower this week with the last 3 to 4 sessions in the red, and if we close lower today, which it looks like we will, this will be our first week of sharply lower trades since midsummer. There's a number of things going on here as this was our first week of trade back from the Labor Day weekend. Fat cattle cash trade has been fairly slow. And then just the fact that this market has been in the clouds for quite some time now, leaving traders looking for any sell signal that they can find. So I'm going to pull up the October feeder cattle chart here, and there are a couple things that I'd like to point out. As you can see, last week we did break above that topside trend line, but ended up closing below it. The one interesting thing here is something we'd call a spinning top, where we open and close at around the same price level, but intraday action pushes the wick of that candle higher. We saw that on both Wednesday, the 27th of August, and then Tuesday, September 2nd. Now, that's not necessarily a sell signal on its own, but when followed by a day of futures losses that's not really caused by any negative news, you can start to see why we've seen a sell-off the past few days. Then as we pull away from the trend line resistance and you get a little sense of uncertainty in the market, we just get a little more selling. Now, whether or not this pullback continues is the million-dollar question. We've got signs pointing both ways, but two things I keep telling myself is that this market has shown us time and time again that it has considerable strength behind it, but also that at the same time it has considerable distance that it can fall while still remaining above long-term trendline support, meaning without showing on a chart that bull run is over. If we look here at the October feeder cattle, we're approaching the trendline support on this channel that we've been in since mid-July. But we could realistically fall another $50 if that fails and still not cross the trendline support that was in place for the first half of the year. So we've basically got 4 things that we're watching pretty closely in this cattle market as we head into the fall, aside from herd size and long-term fundamentals. For me, that's cash prices, retail beef prices, Brazilian tariffs, and the screwworm epidemic. With cash prices, as we know, fat cattle cash averages are a major driver of futures action and vice versa, but when the futures are as high as they are, any question of whether or not cash cattle are going to remain strong can cause some uncertainty in the futures. But when the futures are as high as they are, any question of whether or not cash cattle are going to remain strong can cause some uncertainty in the futures, which we saw this week. Now fortunately, cash cattle trade on Thursday did remain steady with trade of 238 to 243 in the south and 242 to 243 in the north, pushing 245 delivered. Some calls for next week are steady at best, but we're going to have to wait to see how Friday trade develops. Along with that, feeder cattle cash prices. Sale barns have remained hot. The real-time index is back up the past 2 days, currently sitting around 367, and estimates for the CME index are close to 364. So while we have seen some up and down in some of those indices, demand has remained strong in feeder cattle cash markets. Retail beef prices are the next thing that we're watching. At the end of the day, the product that we're producing is only worth what the end consumer will pay for it. And whether or not beef demand remains strong as we head into the fall will ultimately decide that. So here we can see some data from the Bureau of Labor Statistics showing average retail prices of ground beef historically compared to 2025. As we can see here, we've had a pretty steep increase in ground beef prices this year, but not extremely out of line with previous years. Over the past 5 years, we've seen about a 30 to 50 cent increase in ground beef prices from January to July, and this year we're at about 70 cents. So more than previous years, but considering the change we've seen in live cattle prices, that just doesn't seem to have hit the retail market yet. Now, over the past 5 years, we've also seen a big drop-off in the fourth quarter, and how big that drop-off is going to be this year will be the question. So how much of a premium are consumers going to be willing to pay before looking at other protein options this fall? Now on to kind of the black swans, so to speak. I don't know if they'd be considered black swans because pretty much the whole market is watching them, but that's what we'll call them because they could have significant impacts on cattle futures prices in a very short amount of time. The first is the U.S. tariffs on Brazil. What began as a 50% tariff on all Brazilian products has changed several times, been added onto with additional specialized tariffs to where Brazilian beef imports have fallen 80% over the course of a few months. With Brazil being the leading importer of beef to the U.S., there's a certainly limited supply in the U.S. and pushed futures higher. We don't have updates on this situation currently, but that'll be another item to watch as we head into the fall. The last big thing to watch is the New World Screwworm epidemic and the closure of the U.S.-Mexico border to feeder cattle imports. Our last update from USDA Secretary Brooke Rollins was on August 15th, where she confirmed that the border would remain closed and announced that the U.S. was investing $850 million federal dollars in screwworm research, breeding facilities of sterile flies, and other measures to prevent the spread of screwworm into the U.S. Despite the lack of new updates, this has been a topic of conversation as many speculate on when the border will open again. Most assume this will happen sometime this fall, and as far as I can tell, that seems realistic, but there are a few things that could affect that reopening. One is the current spread and containment of screwworm in the south of Mexico and Central America. This is the latest map from the USDA from the 23rd of August, showing still that cases have remained contained in the south of Mexico into Central America. One interesting thing about this is that the northernmost cases are closer geographically to the south of Texas than they are to the Mexican states of Sonora, Chihuahua, Durango, where the majority of Mexican feeder cattle are imported from. The other thing that should affect the reopening of the border is temperatures across the U.S. We know that screwworms struggle in temperatures below 45 degrees, but it really takes freezing temperatures to knock them out. The caveat to that would be the fact that the larva can burrow 6 or so inches into the earth, so a hard freeze or consecutive days of freezes are going to be needed to be considered safe. Here's a map of average first freeze dates across the U.S., and as you can see, some of the more temperate regions of the U.S. sometimes don't get that freeze until December. So it is possible that the USDA keeps the border closed until Mexico is able to contain its cases further south. That being said, something we need to remember is that each time we've seen the border reopen, it has not been an open the floodgates type of situation. We've had a couple hundred head cross the border over the course of a few weeks. So we'll undoubtedly see a reaction in the futures when the border does reopen. But in terms of actual cattle supply, it's going to take a considerable amount of time for these cattle to make their way into U.S. feedlots. That's all I've got for you today. Once again, I'm Zach Hooker, on behalf of CommStock Investments and executive producer Brienne. Thank you.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.